Hello and welcome to the Sacco Insight podcast, where we are amplifying people's voices. My name is George Ombado, the Executive Director of ACOSCA. Welcome to Sacco Insight, where we are amplifying people's voices, particularly using the credit union system. Today we are going to talk about regulation, supervision, and how to strengthen the financial cooperative system. And I'm pleased that we are having one of the great leaders in the continent. Welcome Marlene Shiels, who is our guest. She's a DE. She's an IQ, she's an African DE, advanced DE. She has all the credentials to be in this panel to support the work that we're doing. My first question, who is Marlene Shiels?
So thank you, George, for the opportunity to be here with you all today. It's an honour to be back in Kenya, my second home. But who is Marlene Shiels? So I have 36 years experience in the Sacco sector, mostly in the United Kingdom, but not exclusively. I was the chief executive of my Sacco for 25 years up until March this year, when I took retirement, which one of my friends has said to me, I'm not doing very well at retirement. Because when I retired on the Friday, as you will recall, on the Monday, you phoned me to see if I was free to do a piece of work here in my second home in Kenya. I have been on the World Council Board of Directors, which was a great honour back in 2009 to 2012. And since 2014 have been volunteering here on the continent through ACOSCA, and have had many opportunities to work with ACOSCA, work with Saccos, work with regulators. Indeed, just last week we were in the beautiful city of Addis Ababa in Ethiopia working with the Regulators Roundtable. So that's who I am. I'm a credit union person through and through, and that's what gets me up in the morning, helping credit unions to be the best that they can be for our members.
Thank you. Your experience will help us find ways of making credit union better. In 2025, has been declared by the United Nations as an International Year of Cooperative, where we believe cooperatives have an opportunity to build a better world. But why is this important to ACOSCA? Why is this important to the financial cooperatives? Because we believe cooperatives, particularly financial institutions, are enabler to empower people and build financial well-being of our people in the continent of Africa and the rest of the world. And by us having this interaction, Marlene Shiels, I'd like to say as ACOSCA, we've been championing and finding ways of how to engage with the regulators so that we build stronger, viable, and sustainable financial institutions. So to our viewers, Sacco Insight is watched across the globe. To our viewers, particularly in the continent, how will you describe the regulatory regime in your environment, particularly in the UK? How does it look like? And particularly compare this with the commercial banks. What is the difference in regulation for the credit unions and the banks?
So the first thing I would say, George, is regulation is critically important, and it doesn't matter whether it's the United Kingdom or whether it's every country in Africa or the US or other continents. Regulation is so critically important to us because it helps put in place prudential standards that Saccos can work to ensure they're doing the best on behalf of their members. But in terms of the United Kingdom, we have dual regulation, as we would call it. So we have, under the central bank, which is the Bank of England, we have the Prudential Regulation Authority. And the Prudential Regulation Authority, what they're concerned about is how is the Sacco run? So do you have good governance? Are you meeting the minimum requirements for liquidity, for capital? Do you have robust systems in place? So the Prudential Regulation Authority is very much around how the institution is run. On the other side, we call it the two pillars. On the other side, the other pillar, we have the Financial Conduct Authority. And the Financial Conduct Authority, what they care about is how the member is treated, how the customer is treated. So we have two sets of regulations. We have two separate rule books, credit union rule books under each of those regulators. And we got some new rules last year from the Financial Conduct Authority, which says, in essence, it says that every firm must act in the best interests of its member or its consumer. So by having that dual regulation, we can very clearly see, is the firm being well run? Is the firm a risk to the whole system if it is not well run? But on the other side, we have, what are we doing on behalf of our members? Are we treating them well? Are we giving them access to quality products and services? So when you think about the dual pillars of regulation, we also then, what we would call our regulatory family, we have a number of other institutions, one of which is our Financial Services Compensation Scheme, which is a deposit guarantee scheme, which I think is really critical for every country to have a deposit guarantee scheme, where every member's shilling is worth a shilling. It has the same value in a bank as it does in a Sacco. So the Financial Services Compensation Scheme in the United Kingdom, every Sacco has access to it. Every Sacco member's savings is protected by the Financial Services Compensation Scheme.
I like this, that we, in your context and the environment that you live in, you have a combination, I'll say it, a cocktail of regulation that is geared towards strengthening the movement. There can never be a better time to have this conversation than this particular time, which I've stated is the International Year of Cooperatives. ACOSCA being also having the UN observer status with the United Nations Department of Economic and Social Affairs, which is responsible to see that we are attaining sustainable development goals. There are 17 of them. And Marlene Shiels, you know through the Development Educators Program that one of the things that the Ds globally we are trying to work on, how do we contribute towards SDGs? And just to relink that and see what, the way you've explained, there is FCA, there is Prudential. Why is this so important to build stability and trust among the credit union system? We were lucky to have you because you've been a chairperson of a group linked to regulation in United Kingdom, and again you've been a practitioner of a community-based credit union. So you can speak from both sides. Why is this critical for us?
So you're absolutely right. As I mentioned, 25 years as a chief executive of a Sacco in the United Kingdom, but also I served for 7 years on a regulators panel, the Financial Conduct Authority, a panel, ultimately chairing that panel for the last 3 years. And you know, in my mind, there is absolutely no doubt that when I look globally at the Sacco system, whether it's in Africa, the US or the UK, often Saccos are seen almost as second-class institutions because we're seen not to necessarily have the same quality of regulation. If we have regulation at all, of course, because not every country does have a good regulatory authority, but often we're seen as second-class institutes because we're not meeting the same standards potentially as a bank, because often we don't have access to deposit guarantee funds. But of course that's changing. It's changing across Africa, it's changing globally as well. As the Sacco system, not only in Africa but around the world, starts to really scale up, we're having better conversations with regulators than we've ever had, I think, in my time in the Sacco system, the 25 years that I was a CEO. We're having good conversations now with regulators. We're sitting down and having open dialogue to ensure that as institutes, we are the best that we can be, that we are able to adhere to those minimum prudential standards and indeed exceed those standards, which many Saccos are doing, particularly here in Kenya, where we see Saccos are really starting to grow and take their place in the credit union sector.
I'm pleased to hear that kind of connection. Last week we are having the African Regulators Roundtable, where you are very key in supporting the African regulators from over 20 countries, think through some of the things that will enable the regulation and supervision, make them perform better, and perhaps make credit unions a financial institution of choice for most of the people in the population. Recently, you appointed the chairperson of a committee of experts looking at how you can strengthen the Sacco system in Kenya. In your view, why do you think the new wave of strengthening the Sacco system and building stability is important? And what does this mean for Kenya and Africa, you having to deal with a country that has grown, but maybe there are many things that need to make the country better in terms of using the Sacco industry?
Well, the first thing I would say, George, is the first thing I absolutely do want to say is, congratulations to the Cabinet Secretary for Cooperatives here in Kenya, who has a vision. And he's shared that vision with the Committee of Experts. And that vision is that we have a strong, progressive, cooperative system here in Kenya. But the Sacco societies are an integral part of that system. They're part of the ecosystem that is cooperatives. And the Cabinet Secretary, he has shared the vision also that he wants to ensure that every shilling in a Sacco in Kenya is as safe and secure as it is in any bank in Kenya. And that's what we all want. We all want institutes where our members feel safe and secure. They can put their money in a Sacco and they know it's just as secure as it would be in a bank. So the Cabinet Secretary, he has a vision. He's told us as a Committee of Experts to be bold. What does good look like for the Sacco system here in Kenya? So the Committee of Experts, what we've been doing is we've spent a lot of time on stakeholder engagement. We're continuing with our stakeholder engagement. So we're speaking to all of the institutes, we're speaking to Saccos, we're speaking to government officials, we're speaking to other banks, we're speaking to the Kenyan Deposit Insurance Scheme, the regulator, SASRA. Every stakeholder that has an interest in the Sacco movement, we want to hear from them. We want to understand where they see Saccos, but where Saccos potentially can be. And when I think about Kenya, I liken it very much to the United Kingdom in so much that the Sacco system is often serving people with fewer financial choices. And we see that here in Kenya, we see it in the continent. And if we can build a really strong Sacco system, everybody benefits, all the citizens benefit, from the grassroots right up to the people with means. Because if we can leverage good products and services for those with means, we can leverage those products and services, we can help more people with fewer financial choices. Because ultimately what we want is every Sacco to be sitting under a strong, robust regulatory environment.
It's quite interesting. When we met last week in Addis Ababa, Ethiopia, where I call it the country of origins, but again, the country where you talk about independence. When you mentioned the vision for the Cabinet Secretary, Honorable Wycliffe Oparanya, who is very transformational, his thoughts are clear on what is best for the industry and best interest for the country, because he's looking at how is the cooperative, particularly the financial cooperatives, are able to enable the government and the people living in Kenya get more financial freedom, live better lives, again linked with what you've been saying about the UN contributing into sustainable development goals. But you notice in Ethiopia, the regulators were quite excited. They were saying, oh, if Kenya is doing this, when are we going to have this in Malawi, in Zambia, in our respective countries? It's clearly a wave that is showing that other countries have recognized the power of the financial cooperatives. But there's this big thing that at times people relate, look at governance, look at ethics. I tell people that governance and ethics are not only restricted to the cooperatives. Africa, our continent, is really struggling around many of those things. And we are doing our part as a financial cooperative to try and shape that in a unique way. What would be your view on how you address this, not only just as a committee of expert chairperson, but just somebody with a wide exposure and experience when you talk to other African countries? Why is governance and ethics a key component of the strength of the credit union system?
Well, the first thing I would say is, as you mentioned, we were in Ethiopia last week at the Regulators Roundtable, and there was great excitement when we talked about the work that the Committee of Experts has been mandated to undertake by the Cabinet Secretary, by the Kenyan government. Everybody's watching. Everybody wants to see what Kenya is doing, because often, as we know on the continent, Kenya has led the way in many things, and indeed they're leading the way in the Sacco system as well. So there is much excitement. So there's a lot of pressure on the committee as well to ensure that we get this right, so that we build something that is good for Kenya but can be good for other African countries as well. But as you mentioned, governance and ethics are critically important, and I can tell you, having been very fortunate to visit a lot of other countries around the world, whether it's the United Kingdom, whether it's Kenya, the US, and other African countries, even Ireland, governance often is the single biggest challenge that we face as credit unions. And what I can share with you a little bit is how we've tried to tackle some of that in the United Kingdom, and some of the lessons that we can learn from the United Kingdom. So when I think back, just very briefly, to 2008, when we had the crisis all over the world, the banking crisis all over the world, the credit crisis. In the United Kingdom, most of our major banks were caught up in that crisis, and there was a lot of challenges faced by those banks as a result of that, and governance was one of the biggest challenges. And what we found, though, was in the regulatory environment, there was the regulator had no tools to really to fix what was wrong in the governance. So we had leaders who were making decisions that they shouldn't have been making. We had leaders who were making decisions that weren't in the best interest of the members and the customers. So in the United Kingdom, what the regulators have subsequently done, and it's principally the Financial Conduct Authority, we've introduced new rules, and these new rules, we call them the Senior Managers and Certification Regime, SMCR. And what SMCR is designed to do, it's a set of rules that basically says that people in a Sacco who are in positions where they're making decisions on behalf of that Saccos, they have to have minimum requirements for experience, for qualifications, and if they're in a material decision-making risk position, so if they can take risks on behalf of the institute, then they have to be approved by the regulator. And I can tell you it's brought governance up considerably, not just in Saccos, but in our banks, our insurance institutions, investments, pensions, because the regulations apply to all financial services. And as I say, what it has helped is shape governance and bring it up considerably, because when you know the regulator, you have to apply to the regulator to be approved to be the CEO of a Sacco or the CEO of a bank, then you're going to make sure that you meet those minimum prudential standards. You're going to make sure that your people are well qualified, they're well trained, and that they're continuing on a journey of professional development.
Thank you. What you've described is what can be done, and it's more of a transformational journey. And when you talk about governance and ethics in an environment that at times, particularly governance, but at times an environment that it's difficult to follow rules, Some people might find the process that you're undertaking painful, but I'm just glad that there's already the vibe that we need stronger, viable financial institution. As your parting shot, we'd like you to give a message to the continent in particular on your views on how we can work together in this transformational journey.
So I think for me, George, certainly the most important thing is that we need to keep an open dialogue. We need to keep talking to each other, because that is, in my opinion, the only way that we will continue to grow the Sacco sector, not just in Kenya, but across the whole of the continent. I've mentioned earlier that the importance of engaging with regulators. When regulators and Sacco systems start to sit down and talk to each other, and they really start to understand what each other's challenges are, good things happen, things change. We learned that the hard way in the United Kingdom. I can share with you that in the past, Saccos, we saw the regulator almost as the enemy. Everything that went wrong in the Sacco, it's to do with the regulations. But when we sat down with our regulators, we had good, open, transparent dialogue. We actually discovered we all want the same thing. We want a sound financial system, a sound financial Sacco system that every citizen can benefit from. Every citizen can build financial resilience through their Sacco. So my big piece of advice is, Saccos, engage your regulators. Regulators, engage your Saccos. Let's have those open dialogues and let's make good things happen, because together we're working to ensure that we have a strong, robust, regulatory, permissive set of regulations. So that is my advice to the whole of the Sacco sector and the regulatory sector as well.
Thank you for that parting shot. Sacco Insight today, as you say, we are amplifying people's voices. Today we had an opportunity to talk about regulation and how regulation and supervision can strengthen the credit union movement. Our take is we continue this transformational journey, and I hope you'll continue watching Sacco Insight. Thank you, Marlene Shiels, for joining us.